Hello and welcome to another episode of FinTech Focus TV with me, Toby Babb. Today, a very exciting episode. I'm pleased to introduce you to Andy Ross from Kalshi. Andy, how are you?
Pleased to meet you, Tony. Great to be here. Thank you very much.
Likewise. So, the Kalshi story has been everywhere recently. Welcome on board. How long has it been now?
Just coming up to 6 months.
6 months. So, a lot of change, a lot of press. Seems everywhere. It seems there's not an event in sight where I don't see a Kalshi sign somewhere involved.
Around the World Cup on the pitch side, right?
It's helped. But tell us a little bit more. Tell us about yourself. Give us a brief intro to yourself, and then we'll go into Kalshi in a little bit more detail after that.
So I'm sort of a city veteran, if you like. I did sort of 18 years at Morgan Stanley, did a variety of things. My very first job was picking up paper tickets and typing them into a mainframe system. I did some risk management. I worked on a CVA trading desk and ultimately ran the CVA trading desk in Europe for Morgan Stanley. That would now be called XVA. I'm just dating myself. And then from there, I was doing that when Lehman's blew up, and that was quite a stressful time. And I said to my boss at the time, Steve, I don't really want to do that anymore. And he went, okay, why don't you start this OTC clearing business? And so off I went and started this OTC clearing business and ended up in this futures world. And I was doing that, and then I left Morgan Stanley to go run an exchange for the London Stock Exchange group called Curve Global, which we did for 6 years. It was going really well, and then COVID came along, and then nobody wanted anything new, and we tried valiantly post people coming back to the office to restart it, but the momentum from that had gone, so we closed that down, and I joined Standard Chartered, and I was global head of prime brokerage for nearly 4 years there. Great growth, great organization to work with, and then left to join Kalshi. I felt that prediction markets was a super exciting, cutting edge, novel and new thing to do in the market, and frankly working with Tarek and Luana, the co-founders, are just working with two of the brightest, most inspirational, talented, dedicated, perhaps sometimes difficult people I've ever worked with, but
it's never a bad combo.
No, exactly, and it brings a great deal of I've learned a lot with working them. I think I've brought a lot into the organisation with my background and skills, and I think that Kalshi is just absolutely on a tear.
Talk a little bit about that fusion, because I was saying off camera beforehand that we talked about the era of convergence beforehand with TradFi and DeFi markets coming together, and this prediction market play feels to me it's got some echoes of what's happening there. We're seeing some people with institutional backgrounds, such as yourselves, get excited about what's happening in the prediction markets and moving across to it, which might seem to some people, a little bit of a risk at certain stages. To others, it's like, look, as you mentioned just there on the intro, this is a super exciting time. There's loads that are happening into it. It's got some of the sharpest minds in the industry onto it. Talk to us Talk to us about that sort of move for you from a institutional career into something now which feels at the very force of what's happening in the markets in the moment.
Well, I guess twofold. First of all, I chose to join Kalshi, and Kalshi is an institutional platform. And so what does that mean? It's regulated by the CFTC. It's a derivative contract market. It's a designated clearing organization. So it's a clearinghouse onshore. We take dollar cash and we lock it from people, and we lock it up in client money accounts. It feels very institutional. It's very analogous to seeing your eyes. And so me being here is about taking the learnings and experience that I've had from the last 30 years and saying I can bring that experience in to Kalshi, and we can continue to make Kalshi institutional. Clearly, it started, and it's always had an aim to be institutional, but it started and got a lot of retail focused. And just last week, for instance, we had one day where 260,000 downloads occurred on the App Store for the Kalshi app, right? So this is a phenomenally fast-growing and successful company. And what's phenomenal about it is, from our perspective, is that my job is to take that institutional basis, that solid foundation, and make sure that it works from an institutional perspective. And so there are things we need to do to enhance liquidity on the exchange. We're working on those. We need to make sure that the technology is available, so people, if they want to use the standardized click screen things that they already have, Haruko, Elwood, TT, those type of things, that they're available for them to be able to use already. And so it's important that we have that, and it's important that we have like clearing brokers. And we've got a lot of success in clearing brokers, but frankly, we haven't got enough bank clearing brokers yet. And so my job is I spend a lot of time bugging my partners at banks and saying, come on, guys, you need to clear this. There's lots of clients who want it, and they suck their teeth a little bit like your plumber. And so there. But I feel it's really important to solve institutional problems by ensuring that it sits within a regulatory framework. Not all prediction markets are the same.
Yeah.
This is a clearinghouse that is the Kalshi clear, that takes both prediction markets and our perpetual products, and it has them together in there. And I think that sound risk management, for instance, you might have seen, but Udesh Jha, CME for a number of years as the chief risk officer, gentleman with huge experience, huge skills, like me, comes from a long background in these traditional finance environments. Our chief compliance officer is someone, Sudhir Jain, and he was at the NFA for a number of years. And so and then Potomac, these are sort of highly skilled individuals that have switched from that sort of TradFi world into TradFi stroke prediction markets. Yeah. And I think that the quality of those people and the impact that we're having and the development that you're seeing in Kalshi is excellent. And it's also a great example, I think, of the way that Tarek and Luana run the company in terms of picking, and I'm not talking about myself because I don't really how I know I got through their interview process, but picking,
There's a track record that might say otherwise.
Well, but picking, institutional talent that is like really high quality, that really adds value, that blends into the company. And there's a few of us that are kind of old with grey hair and lots of kids with lots of skills, and it's just a high energy, high impact, fun place to work where we really feel like we're making a difference.
So there's a lot to unpack from just what you spoke about there. I'm really interested in the sort of talent magnet element of that side of things, because there's quite often once institutional, always institutional, and in the traditional sort of sense of the words. But this is, as you mentioned before, putting out and attracting some of the brightest, biggest names in the industry, who are coming over and the moths to the flame of the prediction market are in. What's the draw for that, and what sort of people are being taken over, and why should they be taken over?
Well, so I've said this before, and I'll say it again. I fundamentally think that the prediction markets is the biggest change to financial markets since the euro-dollar.
Yeah.
Well, I think it's just phenomenal. And let me give you some examples. So the data that we get out of Kalshi is exceptional. And the Fed, for instance, have written papers about the quality of the data. You can Google Kalshi Fed paper. They're saying, look, we're taking that data into our modeling because it's so good on things like payrolls and CPI. Kalshi has been right. When I say Kalshi has been right, the market on Kalshi made by the super users the forecasters who are generating that market. We don't make prices, we're just an exchange. We connect buyers and sellers, right? And so the value of the super forecasters, the value of these experts who are in that market is phenomenal, that they've not got an interest rate decision wrong. But not only that, it's not just like, do they not get the interest rate decision wrong 15 seconds before the interest rate? They're right a week out.
Yeah.
That's sort of really good signal value for people. And so we talk about KPI markets, and KPI markets might be something like let's take Tesla as an example. How many Tesla cars? Which states are going to approve self-driving, or which European countries are going to approve self-driving cars? Which is Mr. Musk going to remain as chairman and CEO? Are the trucks going to get approved? You could start to really see a whole sort of atomization and granularization of the individual factors that make up the risk within a market. That's clearly interesting for equity people.
Yeah.
We've talked about crypto markets. We have a crypto market that that talks about whether Bitcoin or ETH or a variety of other things is going to be up or down. We have perpetuals that you can express views on those things. But the crypto market's up or down. We take a product from CF Benchmarks, which is a benchmark administrator, and we take that product through a whole minute of time, and that's effectively looking at a number of crypto exchanges. So that when we say whether it's going to be up or down, it's not like a point in time where someone could theoretically bang the close. We've constructed it that we take the TWAP of all of those 1 second intervals through that final minute of that process, which means that the robustness of that contract is really high. And so, going back to your question, what appealed to me is that these are kind of these institutional things where you've got data and product and risk management hedges that are brand new, that I think are going to explode in popularity. And the classic example is commodities. You know, the liquidity in commodities trades on about 30 products. And so protein in the US, you know, you've got pork, frozen pork, lean hogs. But there's lots and lots of protein. Chickens, beef, et cetera, et cetera. But there's not a huge amount of liquidity in the underlying products there. Perhaps a simpler product gives you some more there. Now, I'm not saying that we're instantly going to start launching thousands of commodity products, but just think about the number of products that exist in the world. And Kalshi's got to about 10,000 markets now, just under 10,000 markets that we have launched. We're launching this week. And we're launching this week a compute market, for instance. And so not only are we going to have like compute on GPUs, we're going to have compute on DRAM, we're going to have various chip sensitivities on the DRAMs, we're going to have energy costs, and we're going to have token costs. And you can start to say, well, that's a huge complex of things. And we're going to take that and we're going to generate a forward curve on that. And so that's now going to be a market-derived forward curve on compute. And we can do that. Prediction markets are excellent for being able to do that because they change really quickly. A new chip comes out. The width of the chip reduces, the power cost goes down. We can list a new contract. It doesn't require a whole enormous risk management protocol because these things are not levered, right? They sit within a fully funded framework. It's a yes, no, you're on one side, I'm on the other. Together, whatever the amount that we've put into the derivative equals $1, and the winner takes the dollar home. Right? That's how that works. And so the ability to generate new products and try things and put them out is spectacular. So for something like compute that's changing at an enormous rate, the ability to create institutional value for that is phenomenal. So we're excited to be able to take these innovative things, go quickly, develop new products, develop it for customers, put it out into the market, and then move on to the next thing, and then move on to the next thing. And that speed and that agility and that linear focus on delivering what your clients are asking you for is a testament to the sort of the culture that Tarek and Luana have built at the firm and the quality of the all-round people that we work with every day.
Talk to me about that, because culture is an interesting sort of play, isn't it? And it means lots of different things in different environments. And you've worked for some of the biggest companies in the world at various different stages. It feels like there's an excitement. I've seen you over the last couple of years at various different panels, talking very eloquently about being predominantly the equity space. I'm listening to people at the moment talk about various different things. I see it all the time when I'm speaking to founders talking about AI right now. Speaking to you, talking about this prediction market, it seems you've got a lease of life in you that just radiates all the way through from it, and that comes from an excitement about the business, but also about the industry, but also about the business and the culture. So, how would you describe that culture?
So the organisation is tremendously flat, deliberately flat, which means that nobody's got a bad idea and which means that you can get bright, exceptional talent coming out of universities from around the world, but particularly in the US. And you can merge that with people who've got some experience. And we have a little thing like we have lunch together. We often break and have lunch and sit at a long table in the office, and it's one of these sort of concrete floors, cool offices with neon lights and things like that in New York, down in the meatpacking district. but we often have food together, and we'll break bread together, and the team. But then the team works tremendously hard. There was a work ethic around seizing success that is huge, and so.
What do you think drives that? What drives the work ethic? Because I think sometimes that's absolutely linked by the mission, and as you say, from the top down, excitement about what you're doing, but also a little bit from, as you said, look, you mentioned at the start, never a more exciting time, or never a bigger period of change in the markets, etc., etc. That becomes incredibly intoxicating, doesn't it?
So I think those are all true. I would agree with those. I think high quality people always want to drive each other to a greater extent and drive each other to excess. So I think we have this culture where we're all not trying to be better than one another. I don't think that's it at all. I think the culture is one of this hyper collaboration to achieve greatness, and so you're part of a team that's really striving to something. There's a unified goal, and Tarek and Luan are great about this sort of organisation and the culture around a unified goal. Everybody's treated with dignity and respect. There is a zero tolerance rule for dicks, and I'm like, I think that's great because nobody wants to work with a dick. So I think that's really important, and I think that there's an empowerment of individuals, and so I'll run the institutional business, but I will lean then on a variety of 10 or 15 or 20 people who've also got their own job, but to achieve what I need to do to run the institutional business. And there's not like this hierarchy of structure where everybody sits within it. So coming from the back, I was like, gosh, you mean I can just lean in? Yes, everyone expects you to lean in and own it and solve the problem. And so if you want to take hold of something and you want to drive something and you want to make it happen and you want to create it in your image, you absolutely have the authority and the power to do that, and that's just empowering for people and individuals, and I think just brings the very best out of everybody. And look, does everybody thrive in that environment? I don't think everybody does. I think it's quite long hours, it's quite high pressure. We're doing like a couple of major releases a week. We're rolling out new products. We're developing new markets. We're pushing people to go quicker than they would want to. There's definitely things that we're doing in that space that require us to be, that require both a measured approach, which I think sometimes you get some seasoning from someone like me helps with that. But I think that it's a sense of shared goal and shared drive and shared responsibility to achieve the outcome that is there. And everybody is also a shareholder in the company, and there's a shared alignment in achieving the growth of the shareholding.
That's interesting. So that's across the board. And you mentioned before we came on air that this is a business that isn't a massive business, despite the sort of coverage, the speed of growth, the scale of growth, the visibility as much as anything else everywhere. It's still a relatively lean business, right?
Hugely so. So, we're like sort of circa 150 people in the business. There's only...
Which is such an eye raiser, isn't it?
Which is like two of us in London, for instance, myself and the Chief Risk Officer.
And both of you mentioned that you're working across both the UK and going off to the US.
Yeah, so I tend to do 2 weeks in London, 2 weeks in the US, back and forth. Sort of probably roughly 60% in the UK, 40% in the US, and not all of that in New York. See a lot of clients around the US, but that sort of is roughly where it's got to currently. And Odesh probably a little less than me in the US. But I think that's and I have to say that the culture of being in America, the go-getting culture of being in America is just superb. And by superb, what I mean is that people have a can-do attitude. People are entrepreneurial. People want to be successful. People want to figure out how they're going to make money. People want to work hard and get stuck in. There's not a working time directive, and there's not a 2-hour lunch break planned. And the regulatory structure in the US is absolutely brilliant for both raising capital, but also for forming businesses and enterprises that want to have a high growth culture and a high growth mindset. And we definitely don't have that in the UK, and I think it's behind that, even worse behind that in Europe.
Well, I saw you speaking on a panel recently where, there was European equities people on the piece, and you at the on the end of the panel there, and I think that's what you were saying, wasn't it? You were very very pro US as you'd imagine with all this.
I'm very pro the growth.
Expand on that and why you're so excited about what's happening out over there.
Well, we sat on the panel and you referenced it, and the panel really was talking about a lot of technical things to do with whether we were really going to have MiFID 3 and dark pools and lit pools and reporting onto tapes and various things. And it was super technically insightful. But it felt a bit like we were arguing in Europe about whether we should have 1 or 2 bits of plastic to hold the top of our bottle on. Mm-hmm. It felt like that was, with the world outside of Europe and the UK is talking about 24-hour settlement, is talking about tokenization of assets, is talking about, and from going from being in the lead, America's just accelerating past everybody on the regulation around these things, talking about prediction markets. And so 24 hours, tokenization, prediction markets, those are like defining changes to the infrastructure a bit, probably bigger than you saw post-2008 in terms of changes post the great financial crisis. Yeah. And so these are immense. And these are the opportunities in both the things that are going to change market structure. And instead, we're talking about whether we should report after 5 minutes or 7 minutes, and what latency on a tape should be. And I'm like, and whether we should allow dark pools or not dark pools. I mean, it's all important. Don't get me wrong, but it feels like it's all second order stuff. Yeah. And meanwhile, this kind of Chairman Selig at the CFTC is very, very public about this. Mr. Lutnick's the Commerce Secretary been very public about this. It's like innovation will come home to America, and they want the best and the brightest driving innovation onshore in America. And I think that's just phenomenally exciting for the world and phenomenally exciting for America. And I do worry a little bit about the city and a bit about the UK and Europe, because I just think that there's still that's all going to happen and be evolving and changing and moving offshore. And the growth that you're going to get without, the efficiency you're going to get without, the 24-hour nature of the markets, the fact that you're going to raise capital in America, because that's where it's all going to work 24 hours a day, 7 days a week.
Saying that now, right?
And how many IPOs were there in the London Stock Exchange last year, right? I think, was it 1? Right? I'm like, if there was. And so you've got, I think you've got this fundamental change occurring right now live in financial markets, and US is driving that wave, and UK and Europe are still arguing about the bottle top.
What do you think the UK and Europe can do about that? Is it too late, or is there things that you want to see?
Well, I think the way I would frame it, and this isn't my words, these are Mr. Salik's words, and he's Chairman Salik's words, and he's significantly both brighter than me and has a lot more experience, but he talks a lot about this pendulum, and he talks about the pendulum about, perhaps the pendulum pre-financial crisis was too far to the left, and then the pendulum swung all the way over to the right into absolutely stifling innovation, and so all innovation then was occurring offshore. Yeah. And to the extent where we got $90 trillion worth of perpetual futures traded offshore last year. $90 trillion, right? Not onshore in the US, $90 trillion traded offshore. And he's saying that the parameter, the pendulum needs to swing back. And the process in America allows it to swing back. The process in the UK and Europe is not particularly effective of allowing the pendulum to move. Yeah. And so I worry a lot about that. Yeah. I worry about that for my kids.
Yeah, I mean, it's definitely got that sort of element to it. But I think what we've always been quite good at is making an environment over here that encourages innovation. And as you say, that recently it's probably been hit a little bit. We've had rhetoric from various different prime ministers over the years to sort of take advantage of various bits and pieces and play to all of our strengths in terms of geography as much as anything else, talent as much as anything else. But it feels like there's a little bit of impetus that's needed alongside it right now. Well, we're not seeing.
I look, and I don't want to get into politics, but we're talking about removing, any benefits of investing capital in things. It feels like that feels like, you don't have that structure in America, and they've got the fastest growing economy in the world. And rather than modeling ourselves on the fastest growing economy in the world, we think we should model it on something else. It doesn't feel that that's leading to innovation and growth.
Well, let's come back to more innovation and growth and talk a little bit away from politics. Circle back to something which you led with at the start here. The not all prediction markets are the same. A great catchphrase. Tell me a little bit more about break that down for me.
Well, let's talk about the fact that it's a regulated exchange. So what does that mean? So to start, if you wanted to join as a UK person, by the way, you couldn't join because we don't allow people in the UK to join because the UK won't allow people to have access to Kalshi. But let's say, pretend we're in the States a second, you want to join. If you want to join, you have to, first of all, to give me your name and address. Secondly, you have to give me your social security number. And thirdly, you have to tell me which company you work for.
Yeah.
Why is that? Because if you're a Tesla employee and you're trading on Tesla, I'm a bit like that feels like a bad thing to be happening there. We need to have that. Secondly, we have keys available so that independent compliance services or compliance services of funds or banks or whatever can take the data of their employees. And so, because the employees sign up to say you can see it. And so it's a bit like your broker account gets sent to your employer. This is exactly the same. Your Kalshi account gets sent to your employer to check that you're either not trading against the positions. And look, we've definitely heard in prediction markets this concept of insider trading and this concept of manipulation. Partly you have to have good rules, and I talked a bit about the crypto stuff, so having good rules prevents manipulation.
Yeah.
But more than that, people can try and manipulate things on Kalshi. So please come and try, because we monitor the market, we look at the market, we'll find out, because statistically there's an anomaly that you're doing something. We will find you, we will report you to the police, and you'll go to jail.
It's fairly compelling.
It's like the concept that you can have insider trading is not acceptable on any market. It breaks the law, and we have name, address, serial number of everybody that is on it, and we know and monitor every single trade that every single person's doing, and have, for instance, we even have people who used to work at the FBI who work at Kalshi reviewing what is going on our data. And so the reality is you've got to have this high quality standard that you would expect from any good exchange group, management of that process, which includes AML, which includes KYC, which includes exchange monitoring of what people are doing to make sure they're not manipulating markets. And that's what Kalshi does, hands down, categorically.
I think that's a really interesting play, isn't it? Because as long as trading's been trading, people have looked to get advantage and get around the system as much as they possibly can. And I think probably one of the exciting things about prediction markets has been people see that opportunity and say, right, how can we manipulate this to our advantage? Insider trading has never gone away. It's always been something which people have looked at, but and probably, as I say, part of the danger money around this area has been around that sort of mentality. But you're right, when you talk about I guess the very DNA of why it works for you guys and where you have to go, that becomes a really important part of the success of Kalshi, full stop.
Completely agree. And ultimately, if you're going to try and manipulate a market, if you do it on Kalshi, you'll be caught and you'll go to jail.
Yeah. Well, there's as compelling an answer as you could possibly want for it.
Don't do it.
Don't do it. Let's talk about Kalshi itself. You mentioned some incredible statistics so far in terms of what's been achieved already. You've mentioned 150 people doing the work of probably 1,500 people at various different stages. You mentioned the growth that's been happening through all of that. What comes next?
So we've got a few things that we are growing. So we've got perpetuals that are live. We launched perpetuals 30 days ago. And in terms of our user base, we're already at 60% of the total number of active daily users that Hyperliquid have. The volumes are not the same as Hyperliquid, to be clear. We're still smaller than they are. But we've only got a few crypto tokens. We've got plans to add, subject to CFTC approval, a further set of assets in our perpetuals. So that we think that being the everything exchange means you don't just have to. Perpetuals are great because you don't just have to say when something's going to occur. You can just say if you think it's going to go up or down. Right? And that doesn't mean that futures aren't great. It's not about futures being bad. Futures are great. And I've run a futures exchange and I've run a futures clearing business. Futures are phenomenal products. It's just perpetuals are an augment to that for people who don't want to have to spend the cost of rolling those trades. And so it's a customer choice. So growing perpetuals, adding more products around institutional markets is clear. We've got a big rollout of a series of things in FX and gold coming down the line shortly. We think those are really relevant products for institutions and retail. And then adding to the infrastructure. So currently we've got a whole series of FCMs. You need to have an FCM if you want to trade one of these leveraged products and get onto the market. The big thing for me is getting a bank FCM over the line, persuading a bank FCM and its clients, persuading a bank FCM to connect.
And this is what you're busy doing at the moment?
I'm trying persuading, yes. I'm using my best persuasion techniques.
And how's that coming on? What's the reaction to it?
Look, I think frankly it's slower than I'd like, but it's challenging. I've sat in the bank seats, and they've got a full list of things. You've got a whole reg and risk process to run through. But I feel like we're getting there. I feel like I've got a few irons in the fire that are going to come out soon. And ultimately, what I've said to both Tarek and other people on this space is, if you want to know whether institutional adoption has been successful, if you want to know whether there's institutional demand, when a bank FCM turns up, then you know that. Now, that's not to say that we haven't got some great other non-bank FCMs that are either live or joining very shortly live, that we're having a great partnership with on developing things. We're developing structured products. Someone was talking to us today about developing a principal protected note with a payoff based on a Kalshi market. We're talking about developing ETFs. There's a whole story about a variety of people in the US doing that. We're looking at how do we think about indexes. So there's a variety of things that are just wholesale across the financial market space there. But the team's super busy. 150 people is about right. And we try and automate as much as possible.
Yeah, this is interesting, right? Because there's a lot of noise about automating as much as possible, about genuinely utilising AI. It feels like that's something which you guys are doing to be as efficient as you possibly can,
100%,
and productive. Because I say this a lot on the show, that I think a lot of people are utilising it to say, right, how can we just wipe out as much as possible? But I think the real interest is how can we augment as much as possible? How can we 10x? You talked about great talent. If you've got great talent that's 10x by the technology that's powering them, that becomes a real
100%. So we have the best in class engineers, I think, on the street, best in class people that I've worked with ever, and we use a whole series of AI tools then to provide them with augmentation. But the fact that they are super skilled as engineers, and we give them tools, is how we are super then efficient. So that's kind of like I view that as a tick box. I view the fact that we've got a marketing department that is, again, phenomenal, and we work extensively, again, using tools there to some AI, some Figma, those type of things to build presentations and documents and visuals that are compelling, and so we're super efficient at that as well. And so there's a marketing team, and you'd expect a company that has a direct to retail end to have a large marketing group, and we do. Got a huge engineering team that we do, and then even myself, I'm I'm augmented with support from individuals in AI to get things to happen, and it's actually liberating because you can work at a cutting edge company with bright people who are using some of the best talent and the best kit that's available to use, but it sits inside a regulated perimeter where we have information security rules, we have what you can and can't do very clearly documented, but in a pro-doing things way, not in a precautionary principle because we don't know way. And it's just
and it shows you how good you could actually be, right?
Well, and I remember, somewhere I worked that I won't name, lots of debates about whether we should even turn Copilot on. It was like, it's like, I think that's
case proved.
Case proved. You just. So I would argue that the 150 people-ish that we've got at Kalshi are probably actually doing the work of 1,500 people. And that means they have to work hard, but it also is an element of take the responsibility, generate that within the clear frameworks and guidance, and make sure that you're delivering, and then using the available tools and that we have to automate and control as much of that as possible.
Do you know what? I've really enjoyed. I mentioned it to you beforehand that this show is 700 odd episodes strong now, and over the last year or so, I've seen people get really, really excited about their jobs again and talking about what they're talking through. I've always had great conversations on this thing. I've always seen people excited about things, but right now you can just feel this sort of sense of change, of opportunity, of innovation. And it's really great to see, and it's really good to see you thoroughly enjoying it and what you guys are doing. So, Andy, it's been an absolute pleasure having you on the show.
Thank you very much, and thank you to all the people who've endured me talking through them for the last half hour on this.
Absolute pleasure. Listen, thank you all for watching. We'll see you soon on the next episode of FinTech Focus TV. Thanks a lot.